Hey, how's everyone doing? My name is Chris, and welcome back to Popcorn Finance. I'm testing out a new setup today, so things are going to look a little bit different. If things go wrong, just know it's because I'm trying out new software here. But I decided to hop on and record this video because I'm sure a lot of you have heard what's going on with Fidelity. I recorded a version of this episode for the podcast, but I wanted to do a special video version to kind of talk about a few other things with some visuals to hopefully help explain what's going on with all this stuff. So if you didn't hear, if you don't know, Fidelity is planning to offer a Bitcoin option within their 401k plans. So you may be wondering, what does this mean? Does that mean I'm going to start seeing a Bitcoin option in my 401k plan? Is it already there? Should I get it? There's a lot of questions around all of this. So let's kind of dive into all this and break it down a little bit. So what you might have seen is an article like this talking about this new option. And the option to purchase Bitcoin isn't quite available yet. Fidelity said that they'll start making this option available mid-year. So we don't really know what that means. That could be in the summer, it could be June, July, August. We don't really know, but sometime in the middle of the year. And they're going to make this available to the 23,000 employers that use Fidelity to administer their retirement accounts. Now, the key thing here to keep in mind is that this doesn't mean that everyone will have access to it. It's just saying that Fidelity is making it an available option. And it's up to the plans themselves, your employers who are running these plans, to decide if they want to make Bitcoin an available option within your plan. So you may not even have access to this after all this is said and done. And this is a big deal because of the fact that Fidelity manages roughly $11.3 trillion total. That's all the assets they have under their administration. And so they're a big player in all of this. And what they do does have an impact on the overall 401k plan market as we know it. I guess that's the way you want to describe it. And the way they plan on offering this is a combination of Bitcoin, cash, and some short-term investments, things like CDs, government bonds, all mixed in together. And this just kind of provides them with some liquidity to just make it easier when people want to buy and sell. Everything's not in Bitcoin. They don't have to immediately sell things in order to get money to people who want to, opt out of that option there. And the fees they explained in this arrangement here is that it'll be about 0.75% to 0.9% of total assets. So whatever you decide to put into this Bitcoin option, that's the fee you'll pay. And then there will be an additional trading fee on top of that that they haven't yet disclosed, but they said it will be competitively priced. I don't know what that means, but I guess it's like a wait and see type of situation here. And it'll just be integrated into your 401k investment menu. So that means that when you log into your 401k plan and you look at all those things, all those mutual funds, all those target date 2055 options, all that stuff you see in there when you go to choose what you're investing your money in, the Bitcoin will just be a drop down in there, another option on the menu of investments that you'll see. And there is a cap, however, on the amount of Bitcoin that you can hold within your plan. Currently, they're deciding to have just an overall cap of 20%. So 80% could be in anything else, but only 20% can go into this Bitcoin option. But it is also up to your employer to determine what they want that ceiling to be. So there's some details out, not a ton of details, but there's a good amount of information out about how this is going to work. But as of right now, you probably won't see anything. And even once it does become available, they said only one employer up to this point has elected to add this option to their 401k plan. Now, this is kind of interesting timing for me to be discussing this, for Fidelity to be providing this option, because as I'm sure many of you have seen with everything that's going on in the market right now, not only is the stock market down, but the crypto market, specifically Bitcoin, has been hit in a significant way. So if I'll bring this up here for you so you can all see here. Right now, this is what's going on with Bitcoin. This is over the past 5 days here. Let me make this full screen for you. You don't need to see my face. Let me get that out of there. So over the past 5 days, Bitcoin is down 14%. If you expand that out to 1 month, it's down 29% or $12,000. If we go out to the 6-month range, it's down $35,000 or 54.89%. So this is pretty significant. It's a pretty big drop off. And that is why I think there's a lot of people who are concerned about whether or not Bitcoin should be an option in these 401k plans. Is it wise to allow people to purchase Bitcoin, cryptocurrency, something that most people aren't really super familiar with? Is it a good idea to have that as an option and allow people to purchase this inside of their plans? So with all of that said, I wanted to talk to you all about some of the reasons why you might want to have a Bitcoin option inside of your retirement plan, and then also some reasons why you wouldn't want to have this option sitting in there at all. So, to stay positive, let's talk about some of the pros. Like why would you want to have this option in there? So number one, if you're already a crypto investor, if you're already someone who just enjoys purchasing cryptocurrencies, by placing it inside of a retirement account, it provides a tax shelter because buying and selling cryptocurrency, as people often do multiple times, sometimes multiple times a day, a month, a year, whatever it may be, when you're buying and selling, you're generating taxable events. And so by placing this type of like investment asset inside of a retirement account, it provides that tax protection because if you're not familiar with it, things like IRAs, 401ks, they provide special tax benefits. That's why people enjoy investing in them. So if you have a traditional version of these accounts, that means you don't pay any tax on the money you put into the plan or any of the gains that are going on in there until you pull it out. So once you start to withdraw that money, that's when you start to pay tax on whatever you pull out of that account. If you have a Roth version, that means you pay tax on the money going in. So whatever money you earn, you've already paid taxes on it. It goes into the account. And then later on, when you decide to pull that money out, you can pull it out tax free. But the great thing is, both options, regardless of what's going on, you're not being hit with any tax liability at that point in time. So if I were to buy Bitcoin with inside of my 401k plan, or if I were to buy any type of investment with inside of my 401k plan, I can buy it, I can sell it, I can do whatever, but I won't incur any type of tax liability in the year where I made all these trades. This is different from if I had it just in a normal cryptocurrency wallet, or if I had a brokerage account where I was just buying and selling stocks and bonds. Those activities could potentially generate tax, tax issues or a tax charge or a tax liability. And then at the end of the year, when I file my taxes, I'd be liable for any taxes due on the gains that I made on those trades throughout the year. So that's benefit number one. You get this nice tax shelter, this nice tax enclosure for your Bitcoin and all the trades you make throughout the year. I would say the second reason why people are looking forward to having a Bitcoin option inside of their plans would be diversification. And diversification is really just a way of saying that we're adding a variety of things within your retirement investing strategy. Think of it like this. When you're investing in stocks, stocks is just not one thing. There's stocks for large companies, small companies, tech companies, pharmaceutical companies. There's international stocks. There's all this variety that exists, and they perform and react to different types of economic conditions in different ways. Same with bonds. There's bonds for corporations. There's bonds for government entities, for federal government, counties. You can get bonds. School districts offer bonds. There's all these types of bonds that provide variety in the type of returns they provide or interest they provide. They perform differently depending on what's going on in different parts of the country. There's all this stuff that's going on, right? So having that mixture of different stocks and bonds provides diversification of variety, which can provide protection when the market or overall, let's just say the economy, because when the bond, stock market, when all those things have these different things that are going on that are caused by inflation, economic changes, we're looking at different layoffs that are going on. You're looking at companies not performing as well as they did during the pandemic. You're looking at war in Ukraine. There's all these things that have an impact on everything that's going on in our world and in our economy. And you want a mixture of investment types because that provides protection, I shouldn't say protection, but it provides things that perform differently. You don't want, if something bad happens in one part of the world or one sector of the economy, you don't want everything you invest in to just go down. You want some things that maybe are hit really hard, but then some things that maybe go up during that same time, or things that are kind of just neutral. That variety provides a more even ride for you as you're investing for years and years and years. So getting back to Bitcoin here, people like the option of, let me throw Bitcoin in there because then it provides some variety. It provides another thing that I can throw into the mix. So that way I have an even more diverse collection of investments within my plan. And Fidelity actually did a survey where they went and talked to a bunch of different people. They talked to individuals, they talked to advisors, and they were asking them, what are the reasons why you want to have this option available to you? And so many of them were saying that the reason they want this option available to them is because it provides additional diversity, additional diversification within their plan. So 47% of those who surveyed said, yeah, I think this will be good for me because I want to have more diversity. I want to have more options within my plan. 69% of advisors also said that that's the reason why they thought that would be a good thing to have within side of the plan. And they stated that the lack of correlation between stocks and Bitcoin, cryptocurrency, was a big appeal for them. But the thing is that although Bitcoin and stocks do perform differently, they have not a super strong correlation. That is starting to change over time. that's going to move us over to talking about the downside. So let's talk about what are some of the downsides and why you might not want to have uh, cryptocurrencies, Bitcoin specifically, as a part of your 401k plan. And I mean, I think the biggest point, and I already kind of illustrated this, is the volatility. Is the fact that you can look at the chart. Bitcoin really has a lot of wild swings. And if we expand this out even further, let's look at 5 years out. So, I mean, 5 years out looks great because if you were an early investor of Bitcoin, you had great returns. You're probably extremely wealthy right now. So congratulations on having the foresight of buying Bitcoin when you did. But let's zoom in a little bit more here and move this out of the way. And let's just look at, for example, let's look at the past year. And you can see there's a lot of ups and downs. We see it dipping down, popping up, dipping down, popping up, back down. It's a ride, to say the least. You're going on a journey when you're investing in Bitcoin. I'm bringing this up a little bit bigger for you all to see. And that is the concern. If there's a ton of volatility, what will that mean for me and my investments over time? Does that mean that I will have an issue where when I need my money, it's going to be a really tumultuous time and I'm going to have a huge drop off as this loud car just drives by me right now? So, because the thing is, over the past year, we've seen that Bitcoin has dropped 41.54%. That's a big drop off. And that's not to say that stocks don't have volatility. Stocks can also be extremely volatile, especially if you're investing in one single stock. But the idea is when you invest in retirement, you want to invest in things like mutual funds that track the entire stock market. So that way, all your money is not reliant on one company and how they perform, because you could run into similar situations as Bitcoin if you were to just put all your money within one stock. But the thing is, in most 401k plans, you cannot just purchase one individual stock. You're purchasing mutual funds, which automatically diversify your money, because when you buy into a mutual fund, you're buying hundreds, sometimes thousands of companies' stock all at once. And it provides that natural diversification. Whereas if there's a Bitcoin option, you're really just buying Bitcoin. So volatility obviously is reason number one why you would want to be cautious, or maybe not even decide to purchase Bitcoin within your 401k plan. Now, in some articles I read, they mentioned security. They talked about how, the people have had stories of losing passwords, which kind of takes away your access your Bitcoin or your crypto wallet. Now, this is less of an issue, I think, for me, because, Fidelity, they're such a large company. They're used to, as I've discussed, managing trillions of dollars. So I don't think they're going to have a problem where they're going to just lose access to your Bitcoin. Not saying it's not possible, but it seems unlikely with a company as large as they are. I'm sure they have a lot of safety measures in place. But the one thing I did want to add on here that is, I think, a legitimate concern is that when we talked about the reasons why people wanted to have Bitcoin as an option within their retirement plans, it's because of the disconnect between how Bitcoin operates and how stocks operate. Their performance oftentimes is not correlated. So they wanted that diversification because they're like, look, if the stock market is down, I want something that's going to perform maybe better. I want something that's going to go the opposite direction of stocks and provide me with some growth while the rest of the market is down. But what's going on, what people are seeing is that there's starting to become a stronger correlation between Bitcoin and the stock market. And so when we talk about the stock market, oftentimes we're talking about an index or a large group of company stock. Things like the S&P 500 it's an index that tracks 500 of the largest companies in the U.S. And oftentimes you'll hear people refer to, oh, the market is down. They're talking about the S&P 500 or maybe the Dow Jones, that their performance of those indexes are down. Okay, so what they're noticing is that there's starting to be a stronger correlation between the two. And so I was looking at this article. I checked this out from Barron's, and they were talking about that Bitcoin and the S&P 500, their performances, they used to be pretty much no correlation between the two. Correlation is measured from 0 to 1. So 0 means that there's no relationship whatsoever, and 1 means that they move together. When one moves up, the other one moves up right along with it. And so when we go back to this chart here, this line graph, what they're saying is that if you look back to the period from 2017 to 2019, there was a correlation of 0.01. And this was according to the International Monetary Fund. And this means that there was pretty much no relationship between them. What was happening with one really didn't impact the other. And you can kind of see this back here in the later years. You have Bitcoin kind of dipping down and you have it swooping up. And you see that the pattern, the movement doesn't really track too much between the S&P 500, which is this kind of like teal line here, and then the black line, which is representing Bitcoin. There's not really much connection. But what started to happen is around 2020, you started to see more of a connection between the two. Now, it's not one-to-one. As you can tell, Bitcoin is doing a lot of other stuff here. You see this big jump up, and then it drops down, it comes back up, and you see the S&P 500, it's really not moving in that same manner. But they're starting to move a little bit closer to each other. When there was a little bit of downturn in the S&P 500, you might see a little bit of a change in Bitcoin, or Bitcoin had a steep drop off. Then S&P 500 maybe had like a small drop. And so the correlation ended up being around 0.36. And so let me slide this down here and give you another little chart here. This is also showing you the correlation. So as we follow along here in 2017, negative 0.01. I jumped up to 0.04 in 2018. Then it dropped down to 0.09 in 2019. Then it jumped up to 0.22 in 2020, and then 0.36 in 2021. So as you can see, Bitcoin and the stock market are starting to creep closer together in how they move. Because what you're starting to see is that people who dip their toe into crypto also end up dipping their toe into trading. And so their behaviors, their reactions to different things that are happening in the world cause those two markets to get tied closer and closer together, because they're making these moves in both places and can kind of start to tie them together. So it's going to be interesting to see if the correlation between the two start to grow closer and closer over time. It's just a wait and see type of situation. So now you may be wondering to yourself, like, what should I do? Should I invest in Bitcoin inside of my 401k plan? Well, you may not even have to make that decision. So as I mentioned, Fidelity announced that they are going to make that an option available to the 23,000 employers that administer their 401k plans through them. But it's still up to your employer if they want to allow that as an option. So even though they may offer it, your employer could be like, "Nah, I'm good. I don't think this is a good idea. We're not going to be offering this to our employees." So that's one way that could eliminate you from this even being a choice you have to make. Also, if your employer doesn't even use Fidelity, then the option's not there for you. And at this point, of the employers who do use Fidelity, only one has already said they're going to select that as an option for their employees. So this may not even come across your radar. You may not even have to think about this. So don't stress about it too much. But if over time, more and more employers start to add this in, I think you really just have to think about it. You need to use the same cautions that you would use with investing in anything else. Are all your other needs taken care of? Are you putting in enough money overall, period, for retirement? Are you making sure that you have an emergency fund in place? All the other basics that come with this. Do you understand what Bitcoin is, how it moves, how it trades? What are the fundamentals behind it? Do you do you understand what you're putting your money into? You just have to keep that in mind with anything. Even if it's stocks, bonds, you should still understand where you're putting your money into, where your money is going when it leaves your bank account, what's happening with that, what is it being put into, and how will that it perform over time? How much risk is involved in the decisions you make? Because whether it's crypto, whether it's stocks, there's always risk involved. There's no such thing as a risk-free investment. So just keep that in mind. Keep that in the back of your mind as you're thinking, should I put my money in anything? Just make sure you understand it. Give yourself a basic understanding of what's going on. Now, with crypto, as we've seen, I'll throw it back up here again. It's volatile. It is very volatile. There's a lot of ups, there's a lot of downs. There's these super high highs. I mean, look at this. Back here, we're looking at around November 2021. It was trading close to $65,000 per individual Bitcoin. And now, as of the time I'm recording this is May 12th. It's looking at about $29,000. So it's a pretty significant drop off. Now, if we look at something like the S&P 500, let's look, because we know that's down as well. So S&P 500. All right. And we'll look over the same time period. Let's look at 6 months here. You'll see, let me scroll back down here. You'll see that, yes, it's not doing great. It's down about 16%. Now, 16% is better than 50%. But if you look, it's more of a gradual ride. And if we pan this out even more, if we go over here, there's still you see it coming up, a little dip, back up. But you notice that the movement's a lot more smooth than Bitcoin. And that's a lot of the concern around this, that Bitcoin moves in a more erratic nature than stocks do. Not that stocks don't have risk, but you're going to have a smoother ride comparatively when you look at the two. So if we kind of zoom back out, let's look at the year time frame here. If we're looking at the S&P 500, you kind of can see the movement there, down close to 4.5% over the past year. We look at Bitcoin, see down 42%. You just see there's just much more volatility when we look at this. I think a lot of people look at this chart here. Bitcoin, crazy. Look at this. Look at this growth. It went from $2,000 in May of 2017 to, the high of $65,000 in 2021. You compare that to the S&P 500 here, and it's a much smoother. You see this dip when the pandemic hit here, and you see that we're on this downward trend right now. But as you can see, it's a much smoother looking chart when you compare the S&P 500 to Bitcoin. So make the decision for yourself. If I was put in a situation, I don't believe I would purchase Bitcoin inside of my 401k plan, at least not right now. I'm always super cautious. I'm very risk averse. I take a long time before I'll, dip my toe into something. So that's me. That's how I treat things. You may not feel that way. You may be like, you know what, I'm putting as much money as I can when I can and go for it. Bitcoin works off of supply and demand, just like stocks do. So adding this option into the Bitcoin market where more 401k plans may choose the option and more money will get flooded into the market, they may have the stabilizing effect and maybe it causes the market to go up. Don't know. I have literally no idea. No one really knows what's going to happen. So I just say use caution, inform yourself. There's a lot of great articles. I showed you one from CNBC earlier. Barron's has a breakdown on stocks and crypto. You can kind of just do your research to try to understand this as best you can. Because there's a lot to be seen, a lot that's still unknown. And I just want to kind of talk about it a little bit and give you a breakdown of what I've seen and kind of what I understand about what's going on. So thank you for joining me. Thanks for letting me bring you this video version of this description. As always, if you have a question that you want to ask, feel free to just leave it in the comments down below, or you can email me at questions@popcornfinance.com. It would have been nice for me to have a graphic here, but I forgot to make one. So just go look down at the description and there should be an email linked in there, or just leave a comment. Either one works for me. Just appreciate you joining me here for this video version of this bag of popcorn. I hope you have an amazing rest of your week, and I'll talk to you soon.